This is the art of startup war. And my name is Brian McMahon, your host and sensei. Here is what we know. 98% of startups will fail every single day, and mostly due to reasons outside your control. The Expert Dojo Startup Accelerator, we look to even up the playing field by sitting down with the greatest minds in startup investment right here in our studio in Silicon Beach, where we look to shine a light on your path to success. Now, our guests each week have invested millions of dollars into startups and are the most respected investors in the world. Now, they share all they know with you, the listener. So join us on Tuesday mornings at 10 o'clock Pacific Standard Time, starting off your week winning the war against startup failure. We're back. It's another Tuesday morning. It's 10 a.m. We are back here today with Jake Ryan, who is a crypto investor, an angel investor here in LA, and a startup advisor for many, many of the accelerators. And I will be dragging him into mine very, very soon and try and twist his arm. Welcome, Jake.
Hello. Welcome. Thank you.
And thank you for joining us.
Thank you very much. It's great to be here.
So I don't know where to start. So we have 13 investments in the angel space. A self-confessed addict in the crypto space.
That's it. Both.
Which way? Crypto or the way it used to be?
You know, I started about 4 years ago, angel investing. I ended up in, 13 investments now, including some that I advise. 9 of them have gone on to raise subsequent rounds, and so that's good. One's died, but I think that's to be expected. And I love it. I mean, angel investing is a little bit different than crypto, of course, because there's no liquidity. So, you know, you're making a bet and you're waiting 7 to 10 years to hopefully realize a fantastic outcome.
How did you choose those? So the 13, it always fascinates me. And actually for the entrepreneurs who are listening, so our audience is almost entirely early stage entrepreneurs. They're pre-seed, seed, maybe Summit, Series A, and they all have the same question. What is it that I need to have or do or think or see or be for an angel investor to believe in my particular product? So if we look at those 13 companies, were they similar characteristics that got you all excited?
Yeah, I mean, I decided to go ahead and try to specialize in a few areas. Fintech, artificial intelligence. Those were primarily my areas, and so I tried to have a specialty and really dig deep into those areas first.
So if I came to you with a different space, I won't say VR because VR is kind of a tough space, but let's say I came to you with some amazing innovation within retail, which was going to change retail, but it was not fintech and there was no AI built into it. Would you have looked at that if it was amazing?
I would not. No, for the most part, no. I really
got more self-control than I like. Wow.
Yeah, you know, I mean, with angel investing, you know, you don't have to swing at any pitch. And so you can just sit there and wait. There's nothing that's going to force you to make a move. And so I'd rather have what I think I have as a competitive advantage in knowing and experience and expertise. And so for the most part, I would really be sticking to those. Now, I have moved out here and there. There might be something, and it may be the founder and his experience, or perhaps other lead investors that I really know and trust that might sway me. But really, for the most part, I'm sticking to some of those areas that I know.
And look, this is a really good message for entrepreneurs as well. Many times what I see is that an entrepreneur will just get a list of everybody who has, in inverted commas, invested at any stage in the past. And then they just blast all of those people. And two things happen. First thing that happens is all of those really good AI and fintech deals that would have nicely got through the funnel to you get mixed up with all of the other ones. So they do harm to other entrepreneurs. And second, the ones that you see, you either delete them straight away or you recognize the fact that they can't even tell the sector that you're looking after and they're wasting your time and you don't like them.
Yeah, I mean, for the most part, I'm putting up, if I'm using, let's say, AngelList for either syndicates or for some type of deal flow, I announce what I'm specifically looking for and what the 4 criteria are for me to even look at a deal. So
And you'll do that on AngelList, will
I
you?
will, yep.
So you'll write on AngelList, hey, I'm looking for these types of deals. And then, but people can't really contact you on AngelList.
Yeah, they can connect with you, or they can message, and so that's possible. Yeah, and so I think it's important to look at any of your investors, and definitely not take that broadcast brute force approach, but really try to find who's going to be the best fit. And I think you'll learn something as an entrepreneur about the landscape and who's looking for what. And I think you just have a much better all-around percentage chance of success by factoring that into your equation for going out and fundraising.
It's like the Match.com approach as opposed to the Tinder approach. Like
Absolutely.
You can swipe all day long and you're probably going to have fun, but if you want long-term, and that's what it is. When you're bringing an investor in, we have a round that we're closing right now with one of our startups, which has got 9 or 10 investors in the round. And what you realize when you can choose the investors and the investors can choose the startup from almost an equal playing field is you get to build a great team. And if you have a great team, everybody goes in one direction, or at least they have a chance to, right? But if you don't, then it's only a matter of time.
I agree. And I think, as an entrepreneur, you're looking for money, but you're also looking for network, who do they know? And you're looking for expertise so that you can tap that investor for potential help. I think, especially in the pre-seed areas, one of the most important things to factor in, then obviously the money that you're raising, is do you have anybody in that round who can get you in front of the Series A investors? Because, 1 out of 5 or 1 out of 10 make it through a seed round. Well, then the next, then it takes another 1 out of 10 to then raise the A round. And so if you raise the seed round, but you really don't have a good path to the Series A, you're going to be in trouble. So
you bring up such an important point. I'd say when I arrived down here a couple of years ago from New York, and all of my businesses before this had been service businesses. So I thought about things like, I don't know, old-fashioned stuff, profit, making money, not being poor, not having to get money from other people, doing it yourself, that kind of stuff. It doesn't really exist anymore, but it used to exist out there, right? But we're talking about a whole different world. And it took me even a little while to get into the space, which is, it's not so much about, of course it's tied into users and revenue, but it's not led by users and revenue. It's led by being able to raise the most amount of money based on people having faith in you being able to continue the journey forward.
I think that's a critical point. It's do you have a good product, and why are you the guy or gal to deliver on that? Your network is so critically important. And, if you didn't go to Stanford, or you didn't come out of Google X or Google, then you're going to want to be able to build your entrepreneur network. And I think, that's what's so great about Expert Dojo and a lot of the accelerators around here is they come to bring you into the startup community.
We try and build community, yeah. And you bring up a really good point. And I also love the fact that and we don't really do this a lot on the show, but it's such a vital factor of the word relationship as opposed to pitch. And many times the entrepreneurs feel that it's about pitching to 50 people, pitching to 20 people, pitching to 3 people. But actually, it's those one-on-one interactions. This is why I love this podcast, because actually, I don't really have a script. I'm not reading anything. I'm massively fascinated about your journey and everything that you've gone through. And after 30 or 40 minutes in the fridge here, firstly, you're thinking, I got to get out of the fridge. But I'm thinking, we've built a really strong bond, and that's where the relationships come in. And it's only with relationships that you make it past the second or third base.
Absolutely. I think, that's just one of the most important parts of this. It is in business, and it is in the entrepreneur community. So. Yeah. And
then just going back to the angels, because I want to go to crypto in a couple of minutes. But when you're looking at those companies, were you saying, okay, it's AI and it's fintech, but I want companies that are doing revenue, or I want companies that have a certain type of leader in front or a team?
Yeah. So, all deals have 4 components to them, right? I always think about,
I like this. Formula.
It's the product, the market, the team, and the deal. And so, the product is important, but probably the least important of those. The market, I really want to see that an entrepreneur has an understanding of their market I want to hear product market fit in some form, which means there has to be an MVP or some version of a product built already. And I really want to hear that they understand and know the competitive landscape and why their product or service is differentiated. What is the unique value to that? And then probably the most important factor in all this is team, because there are so many times when a good team may pivot. They may be into a slightly different market or bring a totally different product. And it ultimately comes down to a really good team. And I think that's one of the most important factors. And then finally, the deal, like what for what? What am I getting for what in terms of equity or what the offering is? I think that has to be a consideration, because there's plenty of good deals out there, or good companies, or good products, or good teams. But if you don't get it at the right price at the right time, then it's really hard to make it profitable. So ultimately, all those 4 points are important and all a part of the decision process.
I want to dig into a few of them, because it's the 4 areas. If this had been before 2 weeks ago, I would have said, wow, you say the product itself is not as important. But I met this guy called Yossi Vardi. And Yossi Vardi, if you just Google Godfather of Startup Israel, just those words,
Okay.
And nothing else. Page 1 on Google, page 2 on Google, just all this guy, right? And I had the pleasure to meet him about 2 or 3 weeks ago, and we were over in a house just after the Mobile Congress. I was chatting away to him, and I said to him, look, you've invested in 85 companies and you've had 35 exits. Insane, right? One of his first investments was in the company that was bought by Messenger. I think it was ICT at the time. And he got a 1,920 times return on that company. And he said the same thing to me. He said, I have no interest in the product whatsoever. And you can look at Slack and other companies and you kind of get it. But his explanation was even more insightful. He said, when we had the company that Messenger bought, we counted the competitors in the market at the time, and there were 1,000 companies doing exactly the same thing as us, right? And you could say the same thing about Google and the same thing about a bunch of others. But without our specific team, with the user experience that we were building, we would never have won. And of those 1,000 companies, 999 failed. Yeah. So if my main criteria was the product, do you think in a similar type way?
I do. I think that's important. And so, and so really looking at what is that differentiated offering, that's critical. And then what's the moat? Like, what is defensible about this product or service? I mean, how many times did you hear last year about just Snapchat and just they're getting their lunch eaten by Facebook because, Facebook would just copy a feature and they had a problem. Snapchat had a tough time with defensibility, with really building a moat around their community and around their product. And so
they got copied on like day 2, didn't they?
Painful.
It must have been the worst place to go into work.
Yeah, and then when they had a new
C-level staff,
a new redesign, and their entire community was in an uproar. So, I mean, I really think knowing what your unique offering is and being able to communicate that and have a strategic plan that is taking all that into consideration, and then really having something defensible, some defensible moat around your product or service, your company, so that you're able to really have a competitive advantage.
Yeah. What about the team? The team is a toughie, right? Because everybody says team. We all want warriors. I mean, I think many of us in the spell, I love the early stage spell. This for me is the only place I'd be any good. If I was in Series B or Series C, I'd be terrible in the boardrooms. But here, I just look for other warriors. But I don't know if that means a great entrepreneur. It just means someone that I recognize in myself in this space. What does it mean for you when you actually invest in them? Because also, we're going to say whatever the hell you want us to say. Hey, let me tell you what I'm going to do. I'm going to work all day. I'm going to do 18-hour days. I'm great at this. I'm great at that. I can fill in these spaces.
Yeah, so it really depends how you're getting the deal flow. So if I'm able to speak with the entrepreneurs, a lot of it is pattern matching. I started my own company. I built a services business. I grew that up. and so I'm pattern matching to what I think a really good entrepreneur would have in terms of skill set. That's one path. If your deal flow is coming in through syndicates, then you don't have as much information, and so you're not really interviewing directly with the founders, and so you're going either by the syndicate leader and looking at the team, and looking at their LinkedIn and their information, but it's a different evaluation process. And so, yeah, it really depends how your deals are coming in. But ultimately, you're looking for somebody who's able to lead and who's able to hold and communicate a vision.
I love your phrase pattern matching. I haven't heard that before,
Yeah.
but I'm guessing what it means is you look at what's required as far as a skill set to get towards success, and then how many of those skills or attributes the either the entrepreneur has or they have matched within the team. Would that be a good assessment?
Absolutely, that's exactly it. And if it's a founder, I'd like to see the whole team. Like, who does he have on his board of advisors? I think a board of advisors is critical, and so I really like seeing them. If there isn't a board of advisors, that's definitely a negative. If it's a single founder instead of founding partners, I want to see that they have employees or C-level employees that are able to offset what they might foresee as some of their weaknesses. And so
even a pre-seed when it's very early.
Well,
maybe they can't afford to.
Yeah, they may not have somebody. So, but I think you can always have a board of advisors. I mean, I think that's an important. Yeah, you may not have an employee yet pre-seed, and so that may be
because
a little early.
It's a pattern, right? If you have high-level people who are on your board of advisors, the chances are that pattern is going to continue throughout your raise and as you grow your business, and the people are going to get higher and higher. As they get higher and higher, you're going to have more people that are going to help you get to the Series A round.
That's exactly it. I mean, I want to see that you know some people either in the industry, or people that can help and reach out on your behalf, people who have a good network. Ideally, the entrepreneur has successes in the past and has already done this, but, many times that's not the case. And so who they have on their board can really make a big difference, because those advisors can open doors that perhaps, wouldn't be available to you.
Okay, so again, next piece of advice, all entrepreneurs, make sure you are building advisors. Any suggestions as to the types of advisors? Because there's a bunch of schmucks who just make their living not doing a lot for companies. I don't want to be disrespectful to anyone, because there's some brilliant advisors, but sometimes it's hard to know the difference between the people who knock on your door and they sound and look and feel really good from those people who are insanely valuable to your company.
Yeah, I mean,
especially here in LA.
Ultimately, you're looking to build a diverse board. I want somebody who's in your industry who can really help. So I think having an industry expert is important. I think somebody who's had some experience in the startup world is important. And you'll go gut feel. I mean, you'll go and talk to them and see, does it fit? And, you look at their history. Have they had, have they been a startup founder before? Have they helped raise money? What is their experience? And I think that's important. And then if, a third could be a technical person. It really depends on what you need, but I do think a good diverse board will be really helpful.
I love that. So you're saying marry the needs of the company, not in the next month or 2 months, but every single step of the way, at least up until the next round, with the actual people that you're going to get. And then, by the way, even if people say no to you, the fact that you're starting to outreach to really smart, well-known people. And I would also say that as well. If you want to find a great board, you should be finding a great board, especially if you're early stage. The people who come to you at the beginning, they might be people who just take a lot of different chances that maybe one of their startups will go through. So use the opportunity to reach out through LinkedIn. Hey, I've seen you in the entertainment space. You're incredibly powerful. I really like what you've done as a startup advisor for other companies here. I need the same thing myself. Can you possibly help me?
I think that's great. Exactly what's going to help, and advisors are relatively free, right? You're going to give them a portion of your company that'll be over time. It'll be vested over time, 2 or 3 years. You can basically fire them whenever you want. You're not having to have any capital outlay or cash flow, and you're getting, hopefully world-class expertise of somebody who has, 10 or 20 years experience, and they're aligning themselves with you by getting, some shares in your company, and they're wanting to mentor and help make a difference. So I think it's a great fit.
Hey, and you mentioned one other term, and then I want to go and talk about crypto. You mentioned syndication. Now, why would an angel who knows, like, you're in 13 deals, you've got a massive percentage of those deals that have actually already gone forward to the next round, higher than most other angels, actually, the vast majority. Why would you syndicate with other angels or investors?
Well, let's say a lot of those deals might have come and I was into a syndicate. And so the reason why I would do that is that if I wasn't full-time angel investing, I would want somebody to help me alter the risk-adjusted returns. And so I want somebody out there who's in the front lines, who has a good past experience and record in finding good deals, and then I'm willing to pay the syndicate fees, typically 20%, because they're going to help me increase my success rate, and it's very much worth that, especially if I'm not angel investing full time. So syndicates really help you get into some deals that you probably couldn't get in on your own, and it helps you with some vetting and filtering. And so I think syndicates are a great way for angels to really get into good deals.
And how does this, firstly, if a new investor is coming in and thinking, oh, I want to do that because I have no clue what I'm doing, or if a startup is thinking, how do I find a syndicate? They don't just advertise syndicates here on Craigslist, right?
Yeah. So for the most part, let's see, if you are an investor, you can find syndicates like we were talking about on AngelList. And so any of those really good investors have a syndicate, and you can request to be a part of their syndicate. Each have different requirements. You may have to either put some money in escrow, or you may, each of them have various requirements. And so you can get into some of those, and you really can get some good access to good deals. If you're a startup founder and you want to, let's say you're doing a pre-seed round or a seed round, and you'd like an investor, who has a syndicate with them, you're doing the same. You can just look up on AngelList and look and reach out to syndicates that look like they invest in startups like yours. And so
and will they respond if you just reach out to them on AngelList?
I think so. I mean, everybody, wants to make money. And so they're looking for good deals. They're looking for deal flow. If you don't hear from them, don't take it personally. It's, move on to the next one, or circle back with them in a few months. But I think, people are open and ready to do business if they're on AngelList and they've marked, that they're looking for deals.
I love that. Okay, we're going to move to crypto. Now, so look, we were chatting about this at the start. I love crypto. I do. Everybody thinks I don't like it because the first time I went to a conference, I kind of spoke about the fact that I believed just things had gone a little bit too crazy. That was all. And I look at great companies from our past, like Google and other companies, and I look at their seed value of $5 million. And then I looked at some of the deals that were coming through crypto of $100 million. And I'm even though my innovation side is saying to me, cryptocurrency, not even blockchain for a sec. I think blockchain's awesome, but maybe in the same way that Word revolutionized the fact we didn't have to write stuff on paper, or maybe the internet, like blockchain is going to be really cool like that. But I couldn't believe that in my lifetime, money would be disrupted. I never thought that anybody would be able to break through the iron grip that Federal Reserves are the Ford families are, all of them for the last hundreds of years have had. And it broke. And what upset me was I just saw our revolution, maybe some of the leaders in our revolution, taking advantage of that and creating environments that we just knew weren't true.
Yeah, I think,
Am I sounding like an idealist?
No, 2017 was just a confluence of events that really led to A lot of probably capital destruction. I don't remember what the exact percentage was, but I remember at the end of first quarter in 2018, this year, they said 46% of all the ICOs that raised money in 2017 were already dead. And so, there was a confluence of events that we had people that probably shouldn't be investing coming in. We had a big mania cycle. And so there were a lot of people making a lot of speculative money. And it was the Wild West. We didn't have enough controls around it. People were raising money and saying, oh, well, this is a utility token. And so it's not under the guide of and the regulatory body of the SEC. And so we didn't get a lot of direction necessarily from the regulators, and people were probably taking risks, legal risks and investment risks that they shouldn't have. And so that just wasn't a great deal for 2017. And I can totally understand.
It's also weird though as well, I suppose, because a lot of the people making the investments had maybe made $5 or $10 million. They put, I remember. So we've had Brock in here a load of times, and he talked about and the way he evangelized cryptocurrency at the beginning. It was an absolute influence on the space becoming a reality. There's no doubt in my mind. He would come in here and I would say to him, Brock, that is the most eloquent explanation of the most complicated subject I have ever heard in my entire life. And I have no idea what you just said, but I feel like I should have, right? That's how smart and how beautifully you explain that. Like, for real, it was beautiful. But a lot of people, going back in that time, Brock spoke to a guy called Len Lanzi, who runs LAVA, Los Angeles Venture Association. And he said to Len, you should accept Bitcoin for people coming through. He goes, I'll give you some Bitcoin to get started. And Len's going, no, we're not going to do Bitcoin yet. So Len worked out afterwards that Bitcoin was worth about $3 million. That just for what would have been paid in a month of memberships versus the $199 or like the $200 that he got through from the people who came in. So I think also there was a lot of people, there was kind of a lot of different circumstances hitting each other. People who possibly would not normally have been in possession of $10, $15, $20 million found themselves in possession, and they had to do something with it because it's not like you can make it liquid tomorrow. And then you had obviously the people who were driving it up and who had direct access to the crypto itself were pushing it up. And then you had newcomers coming in as well, right? So it's probably will never happen again. It was just that time.
Well, I don't know. I mean, there have been multiple mania phases in crypto already in its 9-year history. We'll see. Excesses always bring those, the bear markets that we've experienced this year. So if we were, perfect capital allocators, we wouldn't have excesses or have to work them off in bear markets. But that's not the case. I still think we have, we're really early and we still have plenty of huge upside in the space. You can remember people in the mid 90s saying the internet will never be a thing. And, the internet will have,
I think it's going to happen, actually.
the same economic value as the fax machine, and how wrong they were. So we're early, and not everybody quite sees the big picture yet, but that's what happens when you're early in a very big cycle.
And there's also different applications. So I stayed clear of the ICOs because I didn't want us to be associated with any investors with the potential losing money, right? So it's just a personal thing we said. But we've stayed so close to it that if you look at Crypto Week, which is happening, or Blockchain Week, which is happening at the end of this month in LA, we're doing an entire day of it, right? So we're partnered with Star. So obviously, I love the space and I'm waiting. Now, we've looked at 2 separate companies, which will be the 2 first that we bring through. One, and I want to get your opinion on this, right? Because you're the expert. I want to see if we're going the right direction. Both have very different applications. One is intrinsically important to the country being able to do what they need to do. The other one solves a problem. So the one that's intrinsically important is African country. The country have got a lot of mineral resources in the countries around it. It's been stable for 10 years, so they haven't had any wars or anything going on there. But they haven't been able to do any drilling or any exploration because they haven't had the reserves or the ability to pay for the development of the regions they were in without giving the whole farm away to the exploration companies. So for them, they want to raise $100 million. and $100 million, which will be we'll call it the Brian coin. And the Brian coin is going to be that country's coin. The coin is going to be put into a bank in Hong Kong. The coins are then going to be used to pay exploration companies because each one is about $5-10 million. So it raises the money for the country in which otherwise there's no other opportunity to raise the money because it's a new, in inverted commas, African country, and it's just very hard to raise money for those types of countries. And then the money will then be used, and as each exploration hopefully increases in value, because we hope and believe there's going to be mineral resources there, then that will then go in and it will increase the valuation of the coin. What do you think?
So let me just make sure I get everything. So they're going to raise money. This is going to be basically an asset-backed security token.
Sure.
That anybody who owns the token will have rights to minerals or prospecting of sorts, exploration, whatever comes out of the ground. They're going to be using the blockchain for transparency and for mineral rights and for documentation, and they're going to be able to have that all on the blockchain. Yeah. I mean, I think that's a good move. It's an interesting move. It'd be an interesting play. It ultimately comes down. All security or asset-backed tokens really come down to the asset or the security. So there is no valuation per se to do on the token. It all comes down to those assets. So
it's the government, right?
Well, you would need to know more about reserves and mining and what. I wouldn't necessarily say it's the government being to raise the 100 million. I think more it's for that country. What do their mining prospects look like? And so ultimately, does that match with a good deal and investing 100 million in there? Would you be able to get return for that? So,
but it's fascinating, right?
It's fascinating.
Absolutely.
The
government have already signed an MOU, a memorandum of understanding, that they want to proceed with it. Like a government of a country are saying that they are looking for all future mineral exploration to be done through the blockchain and using cryptocurrency as the method to transfer the money backwards and across.
I love that. I think it's great for the country. I mean, taxes, really being able to actually get the taxes, making everything transparent above board. I think that would be great all around.
Yeah. So to your point, like there are real applications which are game and world changing. Now we will make mistakes, and there will be certain people who have really good intentions, and there will be other people who've got terrible intentions. But there is the ability for real change. So I'm entirely with you as far as this going forward.
I agree. Absolutely.
Second example is a company, I can give you the company's name because it doesn't matter, Shipsomnia, and they did cruises. They've done cruises all around the world, and they get 3,000-4,000 people, put them on the cruise, get 50 of the top electronic DJs in the world, put them on the cruise, create these mythical adventures on the sea. They have deals that they're putting together with Ripley Scott, and they're bringing in large actors who are going to do these individual chapters. And the idea is you get the 3,000 kids, or maybe not so kids, kind of a Burning Man on the sea. You get these people, put them on the ship. They then have an amazing time. They get galvanized as eco-warriors, the mythical adventures of the sea, talk about plastics in the ocean and everything that goes with it. But you would say on first look, well, why would this be blockchain and why would this be cryptocurrency? Because actually the ticketing process is extremely complex and extremely difficult. And the last 2 cruises they've done, not only have the servers crashed, but I shouldn't say the name it came through, but the transactions that they tried to process were stopped for 7 to 8 days because so many transactions were coming through at any one time. So it's not even just about the fees of the transactions and how that gets put together. It's about you want to be able, and even blockchain itself is good. I mean, you can track things through blockchain, but it's really more of a focus on the currency itself and how can you use that currency within the community of maybe 10 ships of 3,000-4,000 people traveling on each ship. What do you think of that one?
Yeah, and so cryptocurrency would be helping out on the front end with, I am assuming, people are coming from many different countries, and so being able to get and take in various fiat currencies and have a single.
Because it's
currency.
challenging. Like, you're trying to do 20, 30 countries, you're all paying it by normal cash, in inverted
Yeah.
commas. It's very, very few, especially for a startup company, for a company that's just beginning. There are very few processing companies that will actually allow that to go through seamlessly.
Now, would they have their own cryptocurrency? And if so, how would that be used within their economy?
They would have their own cryptocurrency because for a couple of reasons. Number one, within the crypto space, there's a lot of people who like this. Brock and friends for starters, right? So number two, you can create within, and this is the reason I bring this up is because a currency is a currency is a currency. If you don't have a 360 community, it's very difficult for the currency to continue rising up, right? So just paying for tickets only provides one side of the 360 that you're looking for.
Wouldn't work.
So a couple of ideas have been floated through. The first one is that actually people do tasks on the boat, or they do things to help other people within the community. You have a community of 30,000 people, both traveling on the seas and abroad. Another one is if we look at these particular people as being eco-warriors, as doing things within the ocean, trying to take plastics out of the ocean, help islands, then there are other people, you can integrate gaming into it in a number of different ways whereby other people can donate currency in a very simple and easy way through a gaming system, which then goes to people who are then going to actually get up and act in a way that's going to help make the world a better place.
Yeah, I mean,
it's not as streamlined as the first one, right?
Yeah, I would say it has a little bit more tenuous relationship to crypto, but I can definitely see there might be the good application of tokenomics and seeing why they'd pick a cryptocurrency. But
yeah. But so it's interesting, like you have all of these different areas. And I think where it all comes to, and I would love your feel on where you think this is going to go. I just think that money has only taken us so far. And we haven't changed any of the systems that we operate under in 100 years. Like, it's been the same way. The only thing that's really changed is it used to be backed by gold, and now it's not backed by anything. It's just backed by trust. And we're moving into a place where the world we're in today is very, very different from where we were 40, 50 years ago. We can't wait 3 or 4 days for money to be transferred from one place to another. We can't not be able to send money from the States down to Mexico or over to Africa. Like, we can't have a situation whereby for a huge amount of unbanked people, especially if we look at the US, there's tens and tens of millions of people, that it can be so hard to actually transact on things that they need to buy or sell.
Yeah, I really love this book by Carlota Perez, which is Technological Revolutions and Financial Capital. And she really distills down how the 50-year long economic cycle is really driven by technological revolution. The short economic cycle is typically a credit cycle, but the long wave economic cycle is driven by technology. We've seen that with the Industrial Revolution, to steamships, to the automotive and oil revolution, to the internet and information age. And so she outlines a great pattern for how these technological revolutions and what the cycle's like, the phases within it. I think we've started a new phase. And so I kind of, this is a core part of my investment thesis, is that we've started a new technological revolution.
Is this like the fourth revolution?
Yeah, well, this will be the sixth. This will be the sixth surge, the sixth economic cycle. She outlines 5 in the last 200 years in her book. And so I think, distributed ledger technologies and blockchains have started. So 2009 started the next wave. And she breaks down the phases, and so you can see what happens in each phase so that you can appropriately invest and tackle it. So I think we are absolutely with globalization and with this being the first invention in money since probably the 1400s with double entry accounting, this is absolutely transformational, and it will make a huge, huge impact on the world. So I'm with you.
And you've given us some great advice from an angel perspective for people who are looking for investment. What about in the crypto space? So if I'm launching an ICO today, hit me between the eyes. What do I need to do for it to be successful as a company?
Yeah, so, my crypto hedge fund doesn't focus on ICOs. So we're on secondary markets. We're looking at already exchange traded tokens, we're looking for the mid-market, kind of the 100 million to 2 billion in network utility or market cap. And so we don't have a real focus on ICOs. We have made an investment, an ICO investment or a pre-sale private investment, but we really don't focus in that area. And again, it's kind of that risk-adjusted returns model. We're taking a Goldilocks approach, right? Too hot might be trying to find the next ICO and spending all our time there. Too cold is kind of a passive indexed approach to just buying the top 10 cryptocurrencies. And so just right for us is that mid cap. They've made it through, they've built a network, they're on exchanges, they've gotten some traction. And now I think, to get the best returns, the best risk-adjusted returns, I think that's kind of the sweet spot. And so that's where we focus.
Fascinating. And for someone who's just starting off, what's your advice to them? Let's say they have a great application. It is a great potential for an ICO. It should be there. It's either utility or it's security. It doesn't matter. What do they do? Like, they have it, they're ready to go.
I think it's really important to be able to defend why you should be a cryptocurrency or have tokenomics. I think understanding how incentives work and what the tokenomics are of your particular crypto project is the most important. I mean, why some of these projects work really well is because incentives are aligned at various aspects of how people use the token or coin that have been well thought out and really applied. The application of a token has really made sense. And so really getting that component right is going to make the most important strategic difference to how well your project does as a cryptocurrency.
And do you think the same path as 2017, as far as actually going from conference to conference to conference to try and meet investors, is going to be the right path for 2019, or you see a different road?
Well, we've heard from a lot of the regulators. We've heard, I think just last night, from Chris Giancarlo of the CFTC that, for the most part, in regulating cryptocurrency, they're going to go after manipulators and fraud. So they're not really going after whether you're a utility token or. So I think there is if you're in the U.S., there are a lot of opportunities to raise money using any of the avenues that we have for crowdfunding, for a lot of the ways. I think raising money outside the United States is what really worked in 2017, and probably will continue. I think what's going to work in 2019 is a good business and a good crypto project, just like it was in 2017. I think some of the differences are just not having that mania phase, having more tempered approach, and so. You're going to want to raise money in a phased approach, like good venture financing. You're going to want to have a great team. We're going to be less wild west in 2019, and we're going to bring in more, industry best practices. We're going to bring just more methodology and process, and I think ultimately we're going to have better projects in 2019.
Beautiful. On that optimistic note, Jake, thank you. It's been a pleasure. For people to contact you, shall I just say contact us or contact you through LinkedIn, or what's the best way? If somebody's and please don't just, everybody listening, don't just contact him because he's on the podcast. If you've got something which is really valuable and aligned, then I'm sure Jake will be very happy to hear from you. But if not, just take all of the information you've just got on this podcast, and rather than having to ask him out for a cup of coffee and hear everything that he's got to say, you've just heard it.
Yeah, on Twitter, I'm at Tradecraft Jake, and then I write a lot of long-form content on Medium, and that's at Jake_Ryan.
Perfect. And you can find Jake over with me in Africa. Listen, thanks for joining us. It's been another brilliant Tuesday. Come back next Tuesday, 10 o'clock, where I will bring you, again, one of the most influential investors in Silicon Beach.
Thanks, Brian.
Cheers, buddy. That's a wrap. Thanks for joining us. If you know any other entrepreneur equally ambitious as you, then share this podcast by paying it forward to other entrepreneurs who are building your own army. Now, as always, our website, expertdojo.com, is packed with information to help you grow your business, find investment, and train for victory. We also walk our talk and invest in startups every year in our accelerator here in Silicon Beach. You can always reach out to me at brian@expertdojo.com, and I look forward to being back here again at our regular time next Tuesday, 10 a.m. with another of the world's top investors, helping you win the war against startup failure.